Good afternoon, everybody. This is episode number 165. We seem to be having a few technical difficulties because the internet has disappeared, which means Alex has disappeared, who's sorting us out today. And I'm not sure whether we're live or not yet. So hopefully I won't have to repeat myself in 2 or 3 minutes. You are here on a momentous day. Obviously, we have told everybody that today will be the last of the Friday programs that we're calling Thank Furlough, It's Friday.
Oh, Margaret's coming. Margaret can hear us. Well done. Thank you, Margaret.
Brilliant. Alex has disappeared somewhere into ether. And
yeah, he's lost his internet connection.
Yeah, and they wonder why the software companies still say we need bookkeepers. So yeah, of course we do. Angela as well. Great, thank you. Yeah, Thank Furlough, It's Friday. It's not exactly dead and dusted, but you know, it's getting to the stage now where that is becoming the wrong title. And Jackie, I know, will be talking to you today about various things that are happening, including some news that broke yesterday, which I'm sure will please a lot of you. But it's been a good exercise for ICB. I can't call it fun because it wasn't fun. The seriousness behind why we were doing it sort of takes it away from being fun. But we have enjoyed delivering as much help as we can give you via ICB TV, all about furlough. And in fact, it was lockdown and it was furlough that created ICB TV. It was an overnight thing that we decided we needed to do something. We needed to keep you in the picture. And we thought this would make it a little bit more palatable. But we do appreciate you've all had very, very hard times, difficult times, challenging times. You've come through it brilliantly. So as always, a very, very great congratulations to every single one of you. And I know some of you have lost a few clients and some of you have gained a few clients, and we're still not out of it as far as this whole horrible couple of years or whatever it is that we've had. But nonetheless, I think we've got to be very positive that we are still here, thankfully, and touching wood or whatever else you want to touch. And as bookkeepers, I think we've created a huge reputation as being the people to go to when times get tough or the bottom falls out of your world. So thank you to that. And the other congratulations, not just for being ICB bookkeepers, which is great in its own, but the other tasks that yourself going through COVID and the lockdown you've had to take on board and deal with. So very much a big hand to all of you. And just because of that, this year's Raise a Cup Day, which is on the 10th of November, will be even more significant and poignant because we're wanting the whole world to raise a cup to what we've all done and been doing. Now, we are fortunate in the UK, if I can again use that word carefully, that we seem to be coming out of our lockdowns, and you know we're still wearing masks sometimes and then looking really strange because we're doing it other times. So I'm never really quite sure whether I'm supposed to have a mask or not. But our colleagues in Australia, for example, are still in a lockdown. June and I were interviewed last night by a member of the ICB Australia board who does webinars, and he was saying that he's on the west coast of Australia, and the west coast has cut itself off completely from the east coast of Australia, so they've not had any problems. So the rest of Australia have, and I think our office in Melbourne has just gone straight back into another of a long series of lockdowns. So anyway, we might be jumping the gun a little bit as far as the rest of the world is concerned, but you know that's the difficulty with having a global organization. Anyway, of course, Thank Furlough, It's Friday would not have happened, been the same, or had the same effect had I not been always joined by my my colleague, my mentor, even everything. You know, the girl with all the answers, the lady of the shining lamp that has led you out of and through COVID. Jackie Mount, hello.
Hi, Gary. Hello, everyone. It's lovely to be with you. Just going back to when Gary when Gary started this, Gary had one of his amazing ideas after lockdown was announced, and he actually rang me one Sunday lunchtime and said, I want to do this webinar tomorrow, and I want you to come on with me and explain everything about COVID and the lockdown and everything. So that was Sunday afternoon. So there went the rest of that day and Monday, and the rest, as they say, is history. But I've thoroughly enjoyed doing this. It's been lovely to have your thoughts and your feedback. And if we've done as much as you say we've done to help you, then that's made it all worthwhile. And as Garry said, the format will change because, as you know, the actual CJRS and SEISS and everything closes down on the 30th, which I think is next Wednesday, or Wednesday or Thursday next week. So there's going to be nothing new coming out on this, but if anything does come out new, we will let you know, and ICB TV is going to continue. I'm still going to be doing Technical Tuesdays, and I've got a couple of topics that you've sent me. And again, if you've got anything else you want me to cover, just bump us an email over and I'll set that up. But actually, what I did
before you launch it today, I'll just very quickly, when people were asked to book for today's episode, they were asked to rate out of 1 star to 5 star what they thought of the various programs that we've been running. Now, I have to say, and you know, this is blowing our trumpet, Thank Furlough, It's Friday has got is a 5 star.
Oh, wow.
5 star, which is wonderful. Technical Tuesdays also 5 star. Now, I think you said Ian was going to be listening in today. He gets a 4.3. Well, that's why too fast. I have indigestion after these sessions. 6-1.
Oh, I think Ian is watching this afternoon. He emailed me this morning. So
yeah, so that was good. And asked what it is they wanted from us. The overwhelming choice was more.
Well, that's good. Well, we like doing it, don't we, Garry? Yeah. You and I, we're suckers for punishment. And there's some lovely comments coming in on the chat line, which if you could see, that's great. If not, you know, thank you for those. Okay. I've got a lot to get through this afternoon, so shall I get going, Garry?
Yeah, please do.
Now, I had a request from, I think it was Claire, who said, is it possible for you to go through the SEISS grants, because it's getting very confusing and you're all doing your self-assessment returns and knowing what to do. So I said, yeah, not a problem. So I'm doing it this afternoon. So thanks, Claire. That's given me something to look into this week. Now, what I will say before I get into this and before I make the big announcement from HMRC this week, if you haven't picked it up, is that everything, if you look on that COVID page on gov.uk, all you are getting is the latest version of it. So what I've done today for you is I've gone back through the entire set of archives and redated everything. So there's quite a lot on there. But what I think we're going to do, because I'm probably going to have to race through this afternoon, is I am going to talk to Alex and see about getting the slides that I'm doing today uploaded onto our COVID hub on the website, because that COVID hub is going to be there for some time. So I'm going to try and get the slides up there so that you can log in and refer to those. If you're a member, you can go and you can have a look at those and work through them at your leisure, and then obviously contact me if you've got any queries. Now, I have put these through together fairly quickly, so there may be some errors in this. So I'll probably pick up the typos and the spelling as I go through this afternoon, with apologies. And but I'll make sure that they're corrected before we go. So let me just share my screen. Share my screen. There we are. And PowerPoint. Okay, so it's the final furlough today, but not the final ICB TV. So let's have a look at what we're going to do now. Some of you I know have already seen this, and I think we got the information out yesterday. We picked up from the team that was up at Accountex North this week that something was going to be announced yesterday. I rang Verna yesterday morning and said, really cheeky, but I know you're probably embargoed yet, but can you let us know what it is? So she said, I'll have to ring you back. And she contacted me, and I had a meeting with a couple of the HMRC people yesterday to talk it through. But basically the big news this week is that MTD for ITSA has been deferred for a year. Now, you are aware this was due to go live from April 2023 for all sole traders, partners, and those with property income, not limited companies. The quarterly returns, everything else is going to come through. Now, due to COVID, and I also think a lot of pressure from various all the professional bodies and everything, is that there's just too much going on at HMRC at the moment. So they have announced that it's been deferred until April 2024. So that gives us a bit of breathing space. Now, the pilot is still going. And one of the things that came out of the small print in this today that I've been looking at is that if you do want to join the pilot scheme, you can drop out of it if you're not happy with it. But if you do join the pilot scheme, because they've now deferred the mandation for a full year, it means that the pilot scheme will actually run for a full year, right the way through to that 31st of January deadline for submitting all the final uploads and confirming everything. So it does mean that they can run a full pilot scheme without and get through that, so they can really do feedback and test it completely before they get everybody, because there are a huge amount of people are going to be joining this mandated on the day. But it's interesting because partnerships have been deferred a further year. They don't start until April 2025. So again, it's purely now sole traders and those with income from property, which will start in 24. Partnerships will come until 25. That's a general partnership. So any other types of partnerships they haven't announced yet, that's going to come back in a later stage. Now, they've also deferred the penalty system for late filing and payment that was about to come into play over the next year or so. This is, I think, haven't quite read all of this yet, but I think this is the point system. I think is going to be delayed as well. And that's also been deferred until 2024. And there is one other that's been deferred. So they've actually basically deferred everything for at least a year. Now, over the past few weeks, I've done quite a lot with you on this change of basis. And I've done a session, I've done several sessions here on it. There's an article going up or has gone up on this. And basically, what it was is in the transitional year 2022 to 23, they were going to make all of those who have a different accounting year to the tax year, they're going to make you pay all the tax right up to April, end of March 2023. And then from April 2023, everybody has to pay their tax on the tax year. Now, that has been deferred because what was going to happen with those dates is that was going to hit the MTD start date. And that, again, the accountancy bodies, and we've all said, and we said it in our response to HMRC, that it could cause a problem with running systems, too many systems at once. So that has been deferred until at least 2023-24, the transition year. And I say not before because it may still be transferred further. Now, I did have a chat with HMRC about this yesterday. As I said, they contacted me. Contacts there, had a lovely chat about this, and we got some detail. But watch this space because we will get stuff out to you as it comes out. So if you are looking at possibly making your sole trader clients their accounting year to match the tax year, it's still a good thing to look at, because with reduced income over the past year to 2 years, it might still be a good time to look about changing that. So I think that is still something you should be looking at, but it's not mandated. And if you want to carry on with your accounting year, you can. At some stage, that's going to have to change. So still worth looking at it. I know there's only about 7% of all sole traders do not work to the tax year for their account. So it's only a small number, but I know I've spoken to a member this morning and she's gone back to her client, and the client has decided that she's paying her tax far too far in arrears. She wants to get up to date, and they're now looking at doing a 23-month return this year to change the accounting date to go right up. So again, if you've got any questions, come back to me. Now, let's have a quick look at the SEISS grants. Before I get into this, there's not very much change on the CJRS. I've got some dates for you, some reminders coming through, but let's have a look at the SEISS grants. Now, remember, this was for anyone who was self-employed, including partnerships, was claimed by the individual, not the agent. But it's interesting that once the SEISS grant has been submitted and claimed, HMRC will discuss that claim with agents. So if you've got someone who's made a claim and you've got some queries and you're their tax agent for self-assessment, HMRC will talk to you about it. Now, They log in through their government gateway. We had a problem right at the start. A lot of people didn't have a government gateway. That had to be set up. And I know you all did that. And basically, there have been 5 separate grants since 2020, all of which have had slightly different criteria. And we know that some individuals claim the grant to which they may or may not have been entitled. And that's where our members might be having issues now, where I know that they're picking up queries as to whether these should be repaid or not. Okay. Whatever the criteria that changes, the one thing that remained the same was that there was a maximum of average profits before you could claim the SEISS grant, and it had to be less than £50,000 over the averaging period. Now that was started off at 3 years, it's moved into 4 years, it could be 2 years if they weren't trading for very long. So there was an averaging period, and if your profits were more than £50,000 a year over the average number over that period of time, they were not able to claim anything. And it was HMRC who determined whether they could claim or not based on tax returns. Remember, the grants don't have to be repaid. They are a grant, but they are subject to tax and self-employed NICs. And this is where the queries are coming through at the moment. And they have to be reported through the self-assessment. Now, there is a separate box there, so it has to be kept separate from your trading income. There is a box to report the amount of SEISS grants, and grants 1, 2, and 3 to fall into the tax year 2021. Now, I'm going to go back to the change of basis, because if your basis year is not the same as the tax year, you could be reporting accounts in the current 2021 tax year that you're reporting. It might be up to 11 months before, but and that was prior to COVID, so that would have been a full year of income, presumably. But you still have to report the first 3 grants in the tax return that you're making in the year 2021, even if you're not reporting your accounts for 2021. And grants 4 and 5 come into the current year, so they're not going to be reported. That goes up to March 22. So these 2 grants won't need to be reported until at the latest 31st of January 2023. So that's the comment about the additional. So let's have a look at the 5 grants then, and I'll go through and try and remind you. And as I said, what I've done is I've gone through the HMRC archive and I've had a look. I've gone right back to the original documents and I've looked at every single upload since. Because what happens is when they do the upload, they take everything else away and archive it and just leave the latest information. So it is quite hard to go back and find the previous information. And although we've covered this in a variety of webinars, it will be good just to put it in one set of notes for you. And as I say, I will get these notes up on the COVID Hub. I'll try and get those up within the next day or so. Now, very quickly, we're going back to March 2020. Doesn't that seem a long time ago? And it covered 3 months, April to June. That is, I think, sorry, that's first mistake. April to June, April, May, and June, I think that covered. Available to all self-employed or members of a partnership that were being adversely affected by coronavirus. Now, that's all they said, where your business is adversely affected. And I can remember having a lot of discussions with you about this at the time. What does adversely affected mean? And we didn't actually know at that time. We assumed it was profits being reduced, but there was no information about whether that was over that period of 3 months from April to June, or whether it was going to be over the whole year in advance and you anticipated. And I can remember one very, very good piece of advice from one of our senior members that's been with us for a long time, saying, well, even if we do claim it as bookkeepers, because we don't know where our businesses are going, it would be good not to use that money in case at some later stage it has to be paid back. And I think a lot of people applied for the first grant who maybe perhaps shouldn't have done, but we weren't aware of what the situation is, because we certainly didn't understand the terms, the implications of that term. Now, the only thing that came out of that over a couple of weeks of editing the documents was that there wasn't a specific declaration regarding reduced income or profits, but we didn't understand, as I said, at that stage, what this actually covered. But one thing to remember is nothing to do with you as bookkeepers on your self-assessment returns, but your clients or yourselves. It would affect your universal credit the credit applications, because the grant will affect your income for that, and that might affect that. And the first claim closed on the 13th of July. So let's have a look at the calculations. Now, one of the criteria was that you had to have submitted a return for the year 2000. Oh gosh, there are so many typos in this, I do apologize. Must have traded in 2018-19 and submitted the tax return on or before the 23rd of April. Now, that was an extension that was given from the 31st of January, because a lot of people had missed the 31st of January deadline because they were busy trying to sort out what they were going to do. So there was an extension from the 31st to the 23rd of April. They must also have been trading in the year 2019-20 and be continuing to trade in 2021. So those were the sort of things that they were probably having to declare back in the day as to what they were doing about their trading. Now, as we are aware, the grant was based on 80% of their average profits based over the 3 trading years, and they went back to 2016 or average if less than that. It was a 3 months profit, but it was capped at 7,500. Now, 80% of that over the year takes you up to your £50,000 profit. So unlike the CJRS, where you could go on to furlough regardless of your salary, but your salary was capped at 18% and of your salary, of £7,500. This was a cap anyway. So if you were earning on average £50,010, you weren't getting anything. And a lot of people got hit because they weren't able to claim a thing on this one. Now, if based on the 18-19 tax return you weren't eligible, HMRC then went back and looked at the 3 previous years. So basically, HMRC did the calculations for you. You applied for the grant and they told you if you got it or you didn't. And really that was about it. And then once you got it, they worked out your profits, they worked out 80%, and that's what you got with a maximum of £7,500 for grant 1. So that was fairly straightforward. The criteria started to kick in more on SEISS 2. Came out on 29th of May, it was announced. And at the time, if you look at the archive, it says the second and final claim, because they obviously thought this was going to disappear after another 3 months and nobody was going to make any more. And that covered July to September. So July, August and September, that's your 3 months there. Now, the eligibility criteria was the same as the grant number 1. So less than the £50,000, you had to have had the tax returns done exactly the same. But this time, the grant was dropped to 70%, capped at 6,572.50, and that matched the reduced CJRS, because by the time we got through to September, don't forget the CJRS was reducing down to 70%, and they were then having to contribute towards the CJRS grant. So this matched the CJRS grants, so 70%. This time the criteria was slightly tighter, and what it says is that individuals should only have claimed this grant if their business had been adversely affected by coronavirus on or after the 14th of July. And they had to confirm this. Now, this was to do, I think, with their profits, because there was something in there that said adversely affected could mean that their expenses had gone up due to COVID expenses. So buying personal protection equipment and that sort of thing. But it wasn't, and I think it stipulated that it should not be based on any effect that they thought was going to happen in the future. So we're looking at this 3 months to see that your profits had been adversely affected due to COVID. So either your income's gone down or your expenses had gone up. So that's a slightly different criteria. And I think it's the only criteria that's based on that particular reduction in profits over a specified 3-month period. Window opened on the 7th of August, could still claim if you were eligible, because some people decided not to claim for the first grant because their profits hadn't been affected and they thought they'd be on the safe side. But maybe by now their profits are being affected, so they could claim the second grant even if they didn't claim the first grant. Now, if after this the business improved, that doesn't mean because your business profits went back up again, you have to repay the grant. This is purely based on this 3 months. So you have to give a list of, keep a list of evidence. And I've got the list that they're looking at for a later slide. And that window closed on the 19th of October. So we've gone to September. We're now into grant number 3, covered October to December. And this time the date was they must have been affected on or after the 1st of November. The same eligibility criteria, they had to have had their self-assessment return in, they had to have traded in 1819, also in 1920, and be intending to continue into 2021. So by the time you get there, they should have known what they're doing. If they closed their business down by then, they weren't eligible to claim for the third grant. Now, this time we were looking at reduced income, not profits, not expenses. Because what the criteria said was it must be currently trading but impacted by reduced business activity, capacity or demand, or had been previously trading and temporarily unable to because of COVID. So it might be a business that's closed down. So again, this one was to do with reduced trading and income, not profits, which is slightly different. Now, I think you've got to go back, if you've got a query on this one, you've got to go back and look at your figures. The declaration that they're continued to trade or restart trading, and that they reasonably believe that the impact on their business will cause a significant reduction in their trading profits. So it's not just trading profits, it's income reduced, leading to a reduction in trading profits. So I've mentioned that one. Now, again, you had to keep the evidence of this. And this time the claim went back to 80% because by now, from the 1st of November, CGIS has been extended. It's gone back up to 80%. So this particular grant went back up to 80%. The claim window opened on the 30th of November, closed on the 29th of January 2021. So those are the first 3 grants that are having to be reported in your current SAT returns that you're doing. And I think what's happening with this is that HMRC know exactly how much they have paid. And the figure should be pre-populated into your client's self-assessment tax return. Now, you may very well have different figures, or you may not have any figures at all because grants went into your client's personal accounts rather than business accounts, and you haven't actually seen this. So the figure's pre-populated. Now, if you put a different figure in, because you think you've got a different figure, HMRC will overwrite that with the figure that they've got. And there have been some investigations held into this. Now, unfortunately, there was a bug in the overwrite program, and I think it was actually to do with, I think I remember now, the decimal point got moved 2 places to the right. So where the grant might have been £9,000, it actually reported it as £90,000 on the system. So they are gradually working through. It's been corrected, but the early ones are being manually overwritten. So if you're in this situation with grants 1 to 3 on the self-assessment return, you do need to speak to HMRC on your client's behalf and see if you can sort this out, because they are well aware of that. It's been well documented. Okay. SEISS number 4 covers the period April to June 2021. So that was the first, that was the grant that, at the start of this this tax year. Now, there is a change in the eligibility criteria here. Profits still have to be less than £50,000, but what you have to have submitted changed, because by now you're into the next set of tax returns that you've had to move on. So you had to have traded in both tax years, 19 to 20 and 20 to 21, because don't forget, April 21, we're almost into the 21-22 tax year. So you've got the figures, you know you traded in those 2 years or not, but you had to have submitted your tax return for 1920 on or before the 2nd of March. Now, the announcement for this was made on the 2nd of March, and that's when they gave the deadline. So if you had submitted your tax return for clients up until the 2nd of March, you were fine. Now, if your 1920 tax return hadn't been submitted by the 2nd of March, no grant was available to you. They cut it off at the knees, boom, bosh, done, nothing was paid at all. And I think anyone who was late with their tax returns, now of course no ICB people would be in that situation because you've all got yours done in plenty of time. But for a lot of individuals who perhaps were late doing this, if they did it by themselves, they've had some issues. This time it wasn't a free-for-all. HMRC gave specific dates as to when they could apply. I mentioned that. Now this time, the calculation takes the 2021 accounts in profits into account, which means that new businesses could now access grants 4 and 5, where they couldn't possibly or may not have been able to access grants 1 to 3. So you've got a whole new load of claimants coming into grants 4, which may not have applied because they were new businesses. But because they changed the period where they average the profits, the grant may be lower or higher than SEISS 1. So it's based on a different profit figure. So you can't really compare what they got this time with what they got in grants 1 to 3, because the calculations are based on very different set of calculations. Again, the grant was capped. It was 80% of those assessable profits, capped at 7,500. Still for those with profits less than £50,000. And the claim date closed on the 31st of March for that. Oh, yes, claims can be made by the 31st of May, sorry. Now, this time again, they're looking, we've gone back to trading profits, and you have to have made an honest assessment that there's been a significant reduction in trading profits due to reduced demand or inability to trade. So we're now back to looking at reduced profits based on the inability to trade, but they have actually allowed this to be based on profits. But also they had to continue trading in 2021. So if they'd stopped trading during that year, again, they weren't allowed. And then we come on to what we now know is going to be the final grant, because it finishes at the end of this week. And this is the one that's very different. As you know, during the current period, the CJRS claims have been reduced from 80% down to 70% in July. August and September, they're 60% you claim, and the employer is having to contribute the 10%, and currently 20% of the furlough amount that you're paying has to be a contribution made by the employer. The employee still gets 80%, the government's paying 60%. Now, because of this, HMRC have had a look at the 5th SEISS grant, and they brought in a whole new set of criteria for this. Now, for a start, this covers the period May to September. So although it's a similar percentage calculation, it's based over 5 months. Okay, so this, I think, matches the reduction in the furlough scheme, because this is the same grant but based over a period of 5 months, not 3 months. Now, the criteria was for the same as for number 4. So if you weren't eligible for number 4, because either your profits were too high or you hadn't made that tax return deadline of the 2nd of March, you're not going to get number 5 either. Profits are now averaged over 4 years rather than 3, depending on when you started trading. So you've got an extra year's profits coming in. And of course, don't forget that the profits for the last year included the COVID period. The calculation of profits did not include, as I understand it, the SEISS grant. So the profits have gone down. So therefore, the grant is likely to have gone down as well. Some declarations needed to be made, intending to continue to trade, and that there will be a significant reduction in trading profits between May and September, so this month, by the end of this month. But the basis for payment was very different, because what they've done is they've taken the 2021 profit figure and they've compared it to 1920. Now, in some cases, they've gone back and compared it to a different year. And that's because 1 year may not have been a fair year. So there is a year, but let's assume now that it's based on a comparison between 2021 and 1920. So you've got your accounts for those periods. And don't forget, this period finished in March this year. So we're now 6 months down the line. So you should have your profits available to compare. Now, if those profits had gone down by 30% or more, the grant was equivalent to 80% of those taxable profits. Again, based over a quarter of the year, so 7,500, although it's spread over 5 months, capped at 7,500. But if that calculation proved that the turnover had been reduced by less than 30%, then the grant is only 30% of 3 months average profit. And the cap for that is 2,850. So if by the time you got to the claim for the fifth one, which is open now but closes next week, I think, that's the sort of calculation that you're looking at. It says their claim closes on the 30th of September. So if you're still looking at the last claim, or you've got clients contacting you about this, then your window closes on the 30th of this month. Now, very briefly, I did say what gov.uk want to keep as records. You've obviously got to keep all your normal bookkeeping records, plus the amount that's been claimed on the grant and the grant claim reference. So they've got to have that information. Now, if you're currently trading but have reduced demand, the evidence would be business accounts showing reduction, records of reduced or cancelled contracts or appointments. So you're looking at emails, you're looking at diary entries that have been cancelled, that sort of thing, and a record of the dates where it was reduced. So you're looking at some admin bits there as well as the business accounts, so that you can prove that the reduction was over that particular 5-month period, May to September, and it wasn't to some earlier or later period. Now, if the business is temporarily unable to trade, that's because they're closed due to COVID. Again, there is a whole list of evidence there as to why you've been unable to trade. So you need to keep a record of the dates. You might have been instructed to self-isolate or shield or diagnosis of COVID, or letters or emails from a child's school saying that the school's closed and therefore you can't trade because you're having to look after your child. So this is other reasons why you've been unable to trade, rather than you've been closed down because your company wasn't, your business wasn't allowed to trade anyway. So again, I'll put these up so you can go through these at your leisure. So the other thing to remind you about is sometimes you will have to put in estimated figures into your SAT return. Now, if you have done this and based a claim on estimated figures, and those figures then turn out to be different when they're finalised, you must go back to HMRC and repay any overpayment. Now, what I haven't found out is any information on if your figures were lower, whether you could actually claim more. I haven't found anything on that. The information definitely says that repayments must be made if the grant wasn't allowed or should have been reduced based on the final profit figures. There is a deadline for this, which is the 30th of September. Again, as you can see now, everything's going to come to an end on the 30th. There's a few things going on after the 30th under the furlough scheme. And as I said before, HMRC may very well come back and correct returns. Now, if you are doing an amended self-assessment tax return and you don't declare that you've got to repay this, and HMRC then check the figures and decide that actually you've been overpaid, you could be, or your clients could be into a penalty situation here. So if you're involved in this, you do need to keep out on that. Now, at this stage, because these grants have been made and claimed for by the individual, HMRC will speak to you as an agent. So if you've got any queries and you're allowed to speak to HMRC as their self-assessment tax agent, they will speak to you. Now, I'm not even going to go into how long it's going to take to get through to them and how you speak to them, because you all know the issues that HMRC have had with trying to, shorten their waiting times for calls. But if you do get through to them, they will discuss this with you. Now, quick look on penalties. The penalty must be paid back within 90 days of the payment being made, and the penalty can be up to 100% of the claim that may be charged. So this means that not only do you have to pay the claim back, but you're going to be fined basically up to 100%. And that depends on whether you declared it or whether they found it, if it's been concealed. Now, if this has all been claimed by mistake because they didn't know at the time and they can prove legitimately that they thought the claim was fine and they would be claimed for it, they've got until the 31st of January to pay this back. So there is a leeway to paying this back if there was a legitimate reason why it was overclaimed. Now, scams. There are some very realistic scams still coming out which purport to be from HMRC. Probably contain links to the reclaim, which of course you know by now you shouldn't use. Check the email address very carefully, because quite often there's a slight change in the email address because it's a scam email address. So watch out for scams. Okay, so that is the SEISS grants. As I say, I'm very conscious of time today. This is going to be a lengthy session, I think. So I'm just going to quickly whip through some of the other things. Now, because of COVID, remember the hospitality rates were reduced down to, this is VAT rates, were reduced down to 5% and further if you were on the retail scheme, flat rate scheme. Now, from the 1st of October, the hospitality VAT rate goes from 5% to 12.5%. Now, there's been quite a lot on the internet recently, particularly from one of the software companies, about how to change your VAT rate to 12.5% if you're in that, and how to charge and what you need to charge. So have a look at your software companies, go back to them. There's a lot of information out there on it. Now, this runs until the 1st of March next year, when it reverts back to the standard 20% as it stands at the moment. Now, if you have issued a deposit for 5% or an invoice for 5%, and after the 1st of October, you have to issue a credit note or a refund, you can issue the refund at 5%, even though any new invoices must be invoiced at 12.5%. So if you've got an invoice that was raised at 5% and you're sending out a credit note, you can send that out at 5%, as long as you don't want to send it out, pay them more back than that. Now, just out of interest, that picked up. Anybody can't remember 12.5%, the VAT fraction is a ninth. That's the percent, that's the fraction of VAT that's included in the gross figure. Now, on the flat rate scheme, remember there were different levels of tax that you paid on your gross income under the flat rate scheme. Catering, anything that was 4.5% now goes up to 8.5% from the 1st of October. Hotels were 0, no VAT at all. That goes up to 5.5%, and pubs go from 1% to 4%. So if you're in the flat rate scheme, that is on gov.uk and it's fairly easy to find. So you just need to watch out for those changes which come in on the 1st of October. Finally, the CGRS scheme closes on the 30th of September. Remember, at the moment, 80% to the employee, government grants 60%, employers cover the remaining 20%. The claim window for September closes on the 14th of October. So that's absolutely the last day you can put your claim in for furloughs for September. Remember, if your staff hand their notice in, or they retire, or you issue them with a redundancy note, you cannot claim furlough for them. You have to pay them during that notice period. Any overpayments that you've claimed have to be returned as normal 90 days from receiving the money or from when your circumstances change, so you're no longer entitled to keep your grant. And if you've made a claim and you want to amend it, you've got till 28 days after the month to which the claim refers. So 28 days from the end of September, unless it's a weekend or a bank holiday. So August amendments must be made by the 28th of September, and so on for September by the 28th of October. But I haven't checked to see if that's a weekend, so it might change slightly from there. Quick one on statutory sick pay, because this came in as a query. The statutory sick pay scheme closes on the 30th of September, as does everything else. Remember, this is where you can reclaim. some SSP for COVID related, available to employers with less than 250 employees. Now you have until the 31st of December to make the claim. So the claim window doesn't close. It's just that you can't claim SSP for dates after the 30th of September. So you have until the 31st of December to make the claim. And you can claim for up to 2 weeks SSP. The waiting days have gone. So for this period, you don't have to claim the waiting days. You claim from day one, but only for a period of 2 weeks. Now, one question came in this week on this: can I make more than one claim for the same individual over the last, say, 6 months? Well, yes, you can, but you still can't claim for more than 2 weeks in total. So you might have a 3-day period or a week period, and then another week because they've been self-isolating for 7 days or 10 days. But you can't claim the 2 weeks more than once. Final word about scams. There is a new scam that's come out that was picked up. I picked it up this week. A lot of 18 to 24-year-olds are being targeted. Now, these are either the newly employed coming on university, say, or new university students, and they're being contacted by telephone. Again, like all these scams, it sounds very, very realistic, but these are youngsters who are probably unaware of the situation and could very easily get caught out. Now, apparently, between April and May, or over the 2 months of April to May, there have been over 5,000 scams reported on young people in that age range. So it's a very, very serious thing. So if you've got anybody that you know of that age that's getting phone calls, do make sure they are well covered. And these are people that are being promised tax rebates. So they don't really understand, because they're not bookkeepers or payroll people. They probably don't really understand what the tax situation is. They may be students working part-time or anything, so do be very careful. And that is all I have for you, except to say that I picked up this morning that if anybody's hoping to work over the weekend and do some uploads to Company's House is offline all day tomorrow. So.
Wow. Right. Well, I've been outside, mowed the lawns and built a small extension, but apart from that, it's been very helpful.
I did say, I'm sorry, it's because I haven't been here for 2 weeks, so there's quite a lot to go through. So
no. It's what we're here for, to give the information. And at least people, if they didn't get that, just in case, like Wages Wednesdays, you were causing a nosebleed with the speed you were going through it, they can look at it later, which is always
they can.
good. But
also, I'm gonna go through and correct these slides. I will get these slides put up on the COVID Hub. So if you cannot bear to sit and listen to me going through this again, I will have the slides up on the COVID Hub for you, hopefully within the next day or so. So I'll send them to Alex and he'll put them up. Okay.
Right. Well, a big shout out to everybody who went to Accountex North this week. I gather a lot of people didn't go because obviously it was the first event of its sort where we actually met real people, but some of you did. And our team of Lucy, Kerry and Iris were there for the 2 days. They said they had a lovely time. They were able to have a genuine chat to people and talk about things because they had a bit more time and they weren't constantly being shuffled and jostled by other people. So call out to people like Zoe Whitman, Claire Kendall. Louise Ball was there for 2 whole days. The reason being, actually, we use a photograph of her on our stand. So she was behind us on all 2 days, and she actually turned up and posed next to herself. If you can actually do that that's gone out on the social media, those of you who haven't seen it. And Louise, if you are listening in, Kerry says you actually look a lot younger in real life. So I think that should be taken as a good compliment. We've got quite a few queries coming in, Jackie. So I think if we go into what have we got in the Q&A?
I'm just going to take Bev's question. Bev has asked for the alignment of basis periods with the tax year covered in Thank Furlough it's Friday. Yes, it was, Bev, but I can't remember the numbers. I've jotted it down. I'll send you an email with the numbers on it, Bev. So don't worry about that. I will send you some information on that.
But the chat line seems to be going well. Nice to see you both. Jukita, Owen, to everyone. Thank you very much for that. Elaine Botfield, can you still claim SSP? I think you just answered that one.
Yes, the scheme closes on the 30th of September, but you've got until 31st of December to claim. So,
right. And I think Mrs. Alex has just put up, remember to take the ICB TV survey if you can.
Oh, sorry, I like Judy's comment. I personally feel that without ICB TV during this time, I'd now be sat in the corner rocking. Thank you very much. I know the feeling. I know the feeling, Judith.
Now, Claire Kendall, I mentioned Claire was going to Accountex, and just in time had to collect a poorly child from school, but not in brackets. So is that because the child isn't poorly, or because you're not allowing it to be poorly? But anyway, unexpected.
Oh no, so, no, I think that's a child is poorly, but really isn't. I would think
really
that's a get out of school on a Friday afternoon card. That one, is it, Claire?
Doesn't that just sum up an ICB bookkeeper? Life tends to get in the way a bit, but we soon get back to the bookkeeping, which is good.
Yeah, she's come back. Child is not poorly, just wanted to get out of school. See, I've been there, done it. Worn the t-shirt, Claire.
Naomi Griffiths, I think that's a sensible decision by HMRC. Yes, I think they've actually got two ends joined together for once, which is a little bit rare. So good. I mean, rather than criticise them for dithering, I think we have to say, well, congratulations for working it out.
I think what's happened here is that there is just so much going on at the moment, and it's just all too many things going on, and they've decided to put it off a while. So
Elaine Botfield says thank you. Furlough on Friday has been a godsend. Ian Holloway, I'm here. Hello, Ian. Yes, I'm sorry about that. You do talk very quickly, even quicker than Jackie's, it turns out, but nobody has said they don't like what you're telling them. It's just that they have to go through it several times in order to pick it all up. So it just shows you how much interest there is in payroll and how much is going on. So perhaps I think you always speak rather quickly, so I don't think doing 2 slots a month would help really, but we'll talk about it. We'll see what we can do. But I'm glad you're with us, and yeah, I hope you're doing well. Kirsty, for you, I am so relieved that ICB TV will continue. Well, thank you, Kirsty. I am still trying to get you and sister on here because we want to do something about families working together. But we haven't quite got that all together with our team. They're busy getting quite a lot of year-end stuff out. So, and working on something called the what was it? Luca Awards. That's the one. Don't forget, 1st of November, a major occasion here in London. And please all come along. Kirsty, I think you're already down to come. And then, of course, the following week, we've got Global Bookkeeping Week, the Summit, Raise the Cup Day. So they're all a bit busy. And in fact, the marketing team is actually only 4 people. So they do all of that. So well done to Amy Copeland and the team. What else have we got there?
There's an interesting comment from Helen. There's a comment from Helen. Thank you both so much for ICB TV. You've been a great support. Great to see ICB at Accountex. HMRC kept the deferrals quiet. Yeah, interestingly enough, one member of HMRC came up to our team and said, please, can you tell Jackie there's going to be an announcement on Thursday? So they were embargoed until about 3 o'clock. So I actually rang Verna yesterday and said, this is really cheeky, but can you tell me what's happening? She said, not yet, I'll ring you. So, and while I'm on this, I have to say, I had an email this morning. Verna is moving to a different job in HMRC. We're going to miss her hugely on here. But we do have another young man who I think is going to join us to take her place, called Sam, who I've spoken to, and I think he's going to be absolutely great. So we will miss Verna, and we'll send her all our best wishes for her new job.
And Jackie does work very well with nice young men. So anyway, we will...
Always have done, Gary. Always have done.
I'm not going to say anymore. I'm not saying now. Elaine says your help and support from the very start has been first class, and a sole trader, it means so much to know that I wasn't alone. Actually, we were talking about this. We had a staff get together this week and sort of getting everybody back towards partial working from office and various other things, giving a bit of a shot in the arm. We were talking about the different qualifications, and we were wondering, and I was trying to explain why some of the accountancy bodies have a pass mark requirement of only about half, 50%. So, because obviously that means they can be wrong half of the time. But I did say that the main reason is that in virtually all of the accountancy qualifications, you're expected to go and work for somebody for at least 3 years before you venture out by yourself. So you've always got colleagues that you're working with, you can ask questions. Now, ICB members don't do that. We have a very practical exam rather than, head in the sky sort of stuff. And you should know everything that you need to know, but we realize that most of you will be self-employed. Some of you will employ 1 or 2 people, or in some cases 50 or 60, but let's not boast too much about that. And I think the thing is that we are that missing group of staff that you have working alongside you. We're there to give you that, that ear or that person to fall back on when you need something. And that's exactly what we're here for. And I think that's reflected in the huge number of people that take up some of our free advice on the helplines, one of the helplines or others. So that's what it's all about. You should never feel alone as a self-employed bookkeeper, because we're all in this together. And those of you who go to branch meetings and Inspire tours, summits, will know, every time it's almost like looking in a mirror. Everybody you look at, it's another one of you. So that's really, really good. Jackie's laughing. She's reading ahead of this, I can see.
No, Claire's come back and said, was it the questions at accountants that made Verna want to leave? We introduced ourselves to her bookkeeper friends afterwards, so she knew we weren't at all angry about the change. No, Verna's, I think that's one of these standard things where they move people around in HMRC. You just get them settled and then they move. She's actually gone on to, I can't remember what she said her job was, but she's still going to be keeping in touch with us, but not on the MTD team. She's moving to a different team. But I think Sam will be very good. I've had a meeting with Sam already, a couple, and I think he'll be fine. If I remember rightly, he's an accountant who specialises in tax, who's very, very pro bookkeepers as well. So that will be good for us. Yeah,
well, if you want a set of figures to work tax out on, it's better to get a proper set of figures from a bookkeeper, I would say. Anyway, I will say no more.
Absolutely.
So Raza, thank you very much for that. That's been very helpful.
Quick, Ian's just put up, you may have seen that, he's put it up to everyone. Ian's going to be talking about holiday pay in October. At the start of October, and yes, he will be going through practical examples, and I will definitely be tuned into that, because I've been trying to work one out over the last week for somebody, and we were trying to get our heads around, because it has become quite a lot more complicated. So hopefully,
and I hope Ian will be covering bank holidays, because lots of people nowadays are working 3 days a week and some different times and flexible hours. And I must admit, we've had a few multi-calculations to get something right for some of our team that have come back after having had children or something or other, and how you fit that into your statutory 28 days now that the 8 days of bank holidays are included in there. But so anyway, so that'd be good.
Yeah.
Raza, anyway, I said, Raza, thank you very much. Raza, thank you for keeping Essex alive and going, and that's been good to have you down there, and also Suffolk. So thank you for that.
Quick message to Bev. Peter's come on. Thank you, Peter. Said, I believe the change of basis was episode 164, and I think I did cover it again. So thanks for that, Peter. So try 164, Bev, and if not, I'll send you the details.
Tina Marshall says hi. Renata says good reception. Naomi Griffiths, I'm going to miss TFIF. Yep, we all are, but actually we are still going to be here. There's going to be something else going on. We've got very many things in discussion, so don't worry about it. Your Friday fix is going to be here in one shape, size or another. Yeah, I think that goes back to the beginning there. Now, we get some people coming through on the chat line. We get some people who come through via Zoom with their questions. You can hear pinging in the background my phone here, because some people have got hold of my address, and I'm always asked questions, and one of the really serious questions of the day, I have to say, it's come forward, is what is my pocket handkerchief all about? Now, I'm not sure if that means why do I wear one or what is it, but just in case, I will show you. I'll get that up. I'm not sure if you can see. Can you see that? No, wait a minute.
Need to move it back a bit, Gary. Back towards you.
Yeah, back towards me. There we are. Oh
no, yes, there.
No, you probably can't. Anyway, it's a beautiful painted scene. It's actually a handkerchief that my lovely wife June bought me. It's from the Royal Academy. And what it is, it's by a man called Andres Montagna. It was around in 1435, 1514, so a period we all know and love. And it's called The Roar of Moses, what is it now? The Triumph of Caesar. So those of you who grew up about the same time as me will know that sort of schoolboy humor about all those years ago, people had motorbikes. So that was the Triumph of Caesar. I hadn't heard of that one, but the one I always remember is the roar of Moses' triumph is heard in the hills, and Joshua's triumph was heard throughout the land. So they had noisy motorbikes all those years ago. And I have to say, bringing that right up to date, but one of our team, Alison, is actually the proud owner and rider of a Harley Davidson. So be that way. So anyway, that brings the motorbikes up to date. I've just been asked, can I suggest a film? Yes.
Before you get into films, Garry, there's one quick technical query.
Yeah,
someone's asking about a furlough pre-April. Were they affected by the minimum wage increase in April this year? The answer to that is you have to go back to the date when they were first furloughed. If they were furloughed very early on, they're still stuck with their original hourly rate. If they started later and were furloughed later, you're looking at a later wage, and that's to stop people being given huge increases. So you need to go back and look at there's a couple of dates: the date they started, the date they were first furloughed, and the reference date. So that's the answer to that one. Sorry, Garry, that's the technical one.
No, that's fine. I mean,
bump it across in an email to us and I'll answer it if you need.
John Worrell, many thanks for TFIF. Have to leave now. Thanks once again, John. Absolutely, it'd be great to have you with us. And look us up if you need to on Facebook or on YouTube or something like that. Those of you who like to listen in for the films, you'll know I'm a big Bill Nighy fan. Another Bill Nighy film, actually. This one is called Wild Target. It's a comedy of sorts, and it's a typical Bill Nighy film. He actually plays a hitman, believe it or not, but he is playing alongside Emily Blunt. But it's a typical English film. It's full of British stars. There's Rupert Everett, Rupert Grint, those of you who know him from Harry Potter, and who else have we got in there? Eileen Atkins, Roy Kinnear and George Fisher play a pair of inept assassins. George Fisher, I wouldn't know his name, but he is the one that played Bill Nighy's agent in Love Actually. Nice little guy. So that's a great film. Now, I also mentioned Emily Blunt because she's a British actress, but she lives mainly in America. I haven't really followed much of what she's got up to. Apparently, she played Mary Poppins in a remake of that. But she's married to a man called John Krasinski. Now, John Krasinski, some of you might know him because he played Jack Reacher, but actually he played the son-in-law. It's going to be very convoluted, but he played the son-in-law in a film called It's Complicated. Now, It's Complicated was Meryl Streep and Alec Baldwin as a separated husband and wife, and he played their son-in-law, but he in that played a very, very good comedic role. Now, if you go onto YouTube and put in Emily Blunt and John Krasinski, they are such a great couple. They have a whale of a time together, and they're having some fun with each other. But the bit that I like most, Emily Blunt was interviewed on one of these late night ICB chat shows. I forgot the name of the host. And he said, "Why is it that you British look down your noses at us?" And she says, "Well, we're just more clever than you are." And she went on about how wonderful the British are, how useful the Americans are. And the American audience absolutely love this. So it's the first time I've heard that come through. But she's obviously got quite a cruel sense of humor, it's worth watching. Anyway, so that's my very quick run through a film, just so that I don't get shouted at for always promising to do one and then not doing one.
Garry, Peter's come in and said, the Triumph of Caesar is one of a series of 9. Are you collecting the other 8? No, June, that's the next 8 years birthday present for you if you're listening.
Yeah. Well, I wait to get a new present there. Thank you very much for that. Yeah, I mean, it's actually a lovely painting. It's got lots of rich browns and reds in it, and I've never been able to find the right handkerchief to go with. You can't quite tell in this light, I don't think, but that's brown in my tie. But anyway, so thank you for that. You're obviously an art fan. We must get you to come on. Oh, June's just popped her head around the corner. That spoiled the anniversary gift. It's
oh.
Yeah, I'm
Well done,
sure
June.
not really, but anyway, that's fine. It's 29th of September. It's another anniversary coming through, so that's lovely. Have we got any more on the chats? We've had a couple.
No, it's a comment from Kirsty and Tina about those two being fabulous on a Graham Norton episode.
That's right. And they're an odd couple, really, but they're lovely. And yeah, he plays all American, she plays all British, and they take the rise out of each other something well. So that's really good. Right, and they are hilarious, Tina. Yeah, fantastic. Oh, I'm glad you like that. But he's not in the film I mentioned, Wild Target, with her, but Wild Target is a fun film, and it brings new meaning to the phrase, how much do you weigh? I won't tell you why. I'll let you work that one out for yourself. Well, Jackie, it's been a strange sort of period, has it not?
Yes.
Having to talk about furlough, a word which sounds like it's come out of the 12th century or something other. It's a really old-fashioned word to me, but it's unfortunately become a necessity to a lot of people. But at least it was there as a sort of a net. And we can argue whether it was a big enough net or whether it brought in enough people or what, but at least it was something for some people.
Yes, I mean, the Chancellor did say from day one that it wasn't going to catch everybody in the net. And I think there are some of the sole traders and maybe some of the lower paid who really struggled with this. So we just hope that, people are going to come through this and out the other end. I don't think it's the end of the queries that we're going to get from our members on it. So again, although we're not running this session anymore, if you've got any queries, you can ring me at ICB or you can email, and we'll try and sort them out for you, as you know we tried to do. So yeah, find something else to do with my Friday afternoon now, Gary. What I was going to say is, can I just remind you, please, do let me have Technical Tuesdays. I've got some sessions that I'm doing for the summit, but do let me know about Technical Tuesdays. The first one I've been asked to do, I think I've mentioned this before, is on free ports, both looking at what is a free port, how does it affect wages, rates, that sort of thing. So I'm starting to put that together now. It's probably going to be sometime in October before I do that. But do let me know if you've got any specific topics you want me to look into, and I'll try and come up with some things or get people in to talk to you about it.
Well, ICB is apolitical, as you know, which means we don't get involved with any particular politics, or what I try to do is get involved with all of them and sort of pick out the bones and anything that's supportive of bookkeepers in particular, but small business in general. So on Sunday, whilst the rest of you are enjoying your Sunday evenings or whatever you're doing, I'm going to be at a dinner at the Labour Party conference. I've been invited by Rob Burleson, who is the Director of Corporate Affairs for Intuit. And he's bringing together a small dinner of people, and we're going to discuss the world and particularly in relation to small business and where bookkeepers fall in. I'm very flattered to be invited because I'm in an audience. I've got the CEO from the various organizations there, NatWest, Director of Political Policy. We've got Deborah Mattison, who's the Director of Strategy for the Labour Party. There's such a lot of, I'm looking at this, I'm the only person I don't recognize. But anyway, so that's good. And we'll have Ed Miliband there. I've been to one of these before. Ed Miliband was there last time. He does get very excited when he gets on his high horse, so that's good. Make it for a good evening. And Keir Starmer will be there as well, apparently. So yeah, I do put a foot in all camps, I can assure you. I'm there to fight your corner, and I shall be talking about how we are moving forward as bookkeepers, what we're doing for small business, and what we want to do in the future, and stop telling everybody that if they've got a computer, that's the end of it. And actually, I have to say, we get a lot of support in that from all of the software companies. Other than many years ago when one slipped up at Summit and said, you lot are all going to be out of a job in 2 years' time. I have to say, ironically, he's now left the company, but so he hasn't got a job, but we all have. I mentioned before that Gary Turner, who's a great fan of ICB and bookkeepers, mainly because of his lovely mum, who was a bookkeeper, as he was growing up, he has said that he is now stepping down from Xero. He's leaving that in the hands of other people. He's going to come on and talk to us about his journey and growing up you know, with his mum being a bookkeeper and all she taught him, and what he's done at Xero, what Xero have done. But he's always been a very strong supporter of the people behind the books. You know, it's not just a question of pressing a button. Somebody somewhere needs to know what they're talking about, and it's that discussion with small business owners that makes the big difference for us. And I've seen a bit of criticism this week. I can't remember who it was from actually, but just saying, will you please stop saying we all need to become advisors? We need to go towards advisory. Bookkeepers have been advisors since, well, even before Luca Pacioli's day. That's what we do. So yeah, we're there anyway. So it's just that now, for some reason, somebody wants to give it a posh title and say we need to do something about it. But we're there, been there, done that. And as we've far too often said, got that T-shirt. Right, I think
we've covered everything, Garry. Yeah.
It's a lovely weekend,
We've been through
everyone.
everything.
Julie Branham, hi Julie. Thanks so much for this. But have a lovely weekend, everyone. Yeah, that's exactly what I intend to do. I'm not so sure about my meal on Sunday night, but I'll let you know next week how it all went, and I'll try and get a couple of them to come on to the program and tell you what they think. You know, we might. Politicians, whether we like it or not, they do make decisions, and the more informed they are about us, the better. And I think, to be absolutely honest, us jumping up and down, and particularly Jackie jumping up and down with Werner when they were talking about changes to the tax regime, tax agent regime, it can only have helped. And whether or not it was in any way responsible for some of these delays and changes, we'll say it was, even if it wasn't. But anyway, so have a lovely weekend, everybody. And actually, we'll see you in October, won't we now? Yeah. So yeah, we'll see you next week with something.
Something.
Events. Thank you.
Thank you for your support, everyone. Have a lovely weekend.
Lovely.
Bye.
Thank you very much. Bye.
Bye.